What's going on, guys? My name is Mark and welcome back to the channel. Today I wanted to talk about a couple of things, but mainly 3 reasons why the stock market is going to continue going up. Now, before I even start this video, let me just give a quick introduction and say that my goal here is not to really sway you any which way, whether you think the market is going up or whether you think the market is going down. The goal of this video is to provide you information on why the market may continue going up and why you might want to continue investing or dollar cost averaging over time into these current markets. Okay, I actually intend to make a follow-up video, and the follow-up video will likely be 3 reasons why the market will go down. But for today, we're just going to be talking about 3 reasons the stock market's going up, and that's it. Okay, so I know I haven't been talking about stocks or the stock market in general for a few weeks now. I've taken a little bit of a break, kind of stepped back, started enjoying the summer a bit, but now that I'm back, it's right back to your
regularly scheduled programming.
And let's go ahead and get into this. Okay, so the first reason why the stock market is going to continue going up is because of the Fed, or central banks worldwide, okay? This concept of unlimited money, all these stimulus packages that are getting sent out by the central banks in the US right now, essentially we have powerful interests in politics here which want to see the stock market and economy continue doing well. Well, sorry, maybe not the economy. Apologies for being ignorant, but we all know the economy is not the stock market. As long as there is cash flow circulating, there's people putting their money in the market, and people are willing to buy a stock tomorrow for a higher price than they're willing to pay today, the stock market will continue going up. And I think as long as the central banks stay committed to really propping up that stock market, as well as providing consumers or providing citizens with money to invest, which they're doing during this worldwide health pandemic, we will continue to see the stock market go up, okay? So usually during these prolonged periods of recessionary or depressionary type conditions, people aren't investing in the stock market because they don't have money to invest in the stock market. Well, what have we seen happen globally, or specifically in the US during this pandemic? The Fed has printed trillions and trillions of dollars and provided Americans with money to invest in the stock market. And if you were smart, you would have done that, okay? So getting $2,000 every couple of weeks is very generous from the government. That's a lot more than actually most people make on a bi-weekly basis. So as long as the Fed is propping up the stock market, it will continue to going up, and we may see policy change come November, come the 2020 election in the US. But for right now, there's really no reason for the Fed or the central banks worldwide to stop propping up that stock market, as it's favorable for people who have money in the stock market, which seems like everybody these days. In addition to the stimulus packages, the central banks have also lowered interest rates to all-time lows, pretty much to 0 in the US, and what that does is basically increase the value of stocks, okay? If you can take out a loan for $10,000 and within 3 months pay back $10,000 with 0% interest, I mean, that does nothing but increase the value of stocks, okay? So as consumers, we will never actually see a 0% interest rate, let's say on a mortgage or like on a car loan or anything like that. Where the 0% takes effect is in the interbank market, okay? So let's say I'm the Bank of America and I'm lending to Merrill Lynch, okay? I say, hey, here's $1 billion, and guess what? Over 3 years, you just have to pay me back $1 billion. You don't actually have to pay any interest on that. That increases the amount of loans that banks are able to give out to each other, as well as out to consumers, and that's going to prop up businesses and small business loans, medium-sized business loans, and ultimately just prop up the market in general. You may or may not have heard this, but interest rates really do dictate everything, and the fact that the central banks, or the Fed specifically, has lowered it to 0 really should increase the value of stocks, as we've seen since mid-March. The last little section I have on the central banks or the Fed is that re-election is heavily dependent on a strong economy. Okay, so there's plenty of scholarly articles on this. Maybe I'll just throw up a few on the screen while I'm talking about this, but basically the President of the United States will and should do everything or anything in his power to keep a strong economy going into the election. It's quite unfortunate that this worldwide health pandemic happened, during an election year. Not that I'm for or against Republicans or Democrats. I'm completely neutral when it comes to that. I live in Canada. But going into the election with a poor economy severely decreases the chance that you will be reelected. And for that reason, Donald Trump will do anything and everything in his power to support a strong stock market and to revive the economy, which has suffered greatly during the global health pandemic. Okay, so for those reasons, let me just list them again. We have unlimited money or stimulus packages, interest rates at record lows, powerful interests who want to see higher stock prices, and the fact that re-election is heavily dependent on a strong economy all feeds into central banks and the Fed and the fact that they will never give up. So the second reason that the stock market is going to continue going up is the fact that interest rates are so low, and what that's doing is lowering the yield that you can achieve in the fixed income market on bonds and on purchasing of any type of debt securities. So for those you who don't know, you have stocks which you can buy, which you're basically buying shares in a company. You can also buy bonds of a company, which is essentially buying the debt of a company. And when you buy the debt of a company, they pay it back over time until maturity, where you get the full amount back and you basically made the interest on the bond. Okay, so the fact that certain companies are paying a higher dividend yield than most bonds these days, or are yielding more than bonds these days, only gives people more incentive to throw their money in the stock market instead of the bond market. And for those reasons, the more money that you have coming into the stock market, again, that should prop up the stock market because you have way more incentive to buy shares of a business instead of a debt of a business. Okay, for instance, I have some money in, let's say, a money market account right now that's yielding at 1.5%. Okay, so what that means, over 12 months, it compounds monthly, and by the end of the year, I've made 1.5% on my money that's in that account. Okay, most companies these days pay out at least a 2% dividend yield, so why would you not own the shares of the company, take on the additional risk of owning the stock, which you might see fluctuations in its value, but you'll still end up getting that 2% plus at year end versus only 1.5% in the bond market. Actually, treasury yields and bonds are yielding their all-time low and have been for multiple months, basically since the pandemic started. So for that reason, the fact that you're being incentivized to put your money in stocks rather than debt, that's another reason why the stock market will continue going up. The last point I have here is that we're seeing record levels of retail investors participate in the stock market. And what I mean by that is a retail investor is your everyday investor like you and me. It's not the institutional guys who own, let's say, billions and billions of dollars of a pension fund. It's you and me putting $100 in the stock market, let's say buying a share of Apple or whatever. Or what's Apple trading at? Like $360 these days. Putting $500 in the stock market and buying a share of Apple. Okay, so the fact that we're seeing record levels of retail participation, and I'm not really sure why we're seeing this. I mean, well, actually, maybe there's a couple of reasons. Okay, so it's kind of become popular during this pandemic because there's really not much going on, but the stock market is still open. The fact that there's been a lot of younger people, 18, 19, 20, 21 years old, maybe in university, maybe in high school, that are learning at a younger age about what the stock market is, and this pandemic has given them an opportunity to test the waters when it comes to investing or day trading, whatever you prefer. I'm not discriminating against any type of group here. But basically, the record levels of retail participation, means there's more money coming into the stock market, okay? And there's many influencers out there who have, let's say, control over these younger investors. One of them out there that I'll just throw out there is Dave Portnoy, maybe the president of Barstool Sports, and his famous phrase that stocks only go up. Well, really, he has millions and millions of people watching him each day, and when he says he's buying a stock, there's millions and millions of people that are going to also buy that stock. Is that market manipulation? I mean, we'll let the SEC decide. Anyways, record levels of retail participation means probably a little bit of irrational investing, but it does increase the value of the stock market because as people are more willing to buy stock at a higher price tomorrow than they are today, that means the value of the stock market will be going up. Are we seeing some crazy valuations and some crazy level of, let's say valuation to GDP or market cap to GDP? Absolutely. I mean, we're higher than we were during the dot-com boom of the early 2000s. Is that going to crash? I don't know, maybe that will be in my follow-up video to this, but you'll just have to wait and see. So those are basically my main 3 reasons. I hope you guys enjoyed this video. If you do enjoy this type of content, please don't forget to smash the like button, subscribe to the channel if you aren't already, and I will see you guys in the next video. Peace out.